Welcome back to Stock Market Weekly. I am your host, Evan Medeiros. We got a special intraday edition here. It is currently Friday, 12 p.m. Eastern Time at the time of recording this, July 31st, end of the month. I got family rolling into town here in a couple of hours, so I had to move our recording earlier in the day. So we're only going to look at 4.5 days worth of data. We're not going to get the weekly close, but I think we can do a pretty good job at what happened this week because there's a lot going on. There's tons of volatility out there and some that is just staying the same. And I think it's important to, again, kind of course correct and know where we are in the bigger picture. And I'm going to try and help us do that throughout this video. So let's get into it here. This is the 10-year treasury yield. So this is TNX and this is CBOE's index, and you can see that we are pushing to highs. That means yields are going up. And if we zoom out to a weekly chart, you can see once again we are getting pretty dangerously high here in a holding pattern that dates back to 2023. And we're flirting with this sort of breakout. We had the Fed out this week on Wednesday. They did not move interest rates. So the Fed funds rate on the short end on that near-term duration stayed the same. But they are very much taking a backseat approach. They don't want to give too much forward guidance. They don't want to be in the way of the market, sort of kind of, leading the market to do anything. They want to see markets come together, transact, meet in the middle, and see where maturities go. And we are seeing that on display right now. Inflation expectations are heading higher. So this here is, kind of a yellow flag for, I'll say, stocks broadly. Obviously, they hit different stocks in different ways. So that's our first sort of circle here. If we go to the Mag 7, look on the right-hand side, right-hand column. If I can get this to load here, bear with me. All right, so right-hand column, 1 week return. We had a handful of earnings reports out this week, and Microsoft, take a look at the numbers, 21% up this week. They, pretty much single-handedly sort of saved the slide of this AI kind of spiral that was going down. There was another kind of story hitting at the same time, which we'll talk about in a moment. But Microsoft, for no expectations on this company, they reaffirmed an extraordinary amount of capital expenditures for the full year and just pointed to, kind of growth and return and demand in all the right places. And the stock is up a whopping 21%. Congrats to the longs there. That was a big dislocation of expectations to where the numbers came in. Amazon, a huge report too as well, up 16%. But then you had Apple and Meta really kind of being the rotten eggs here and souring the mood on what's occurring, just from Mag 7 and the mega caps generally. And again, this theme of dispersion here where you're getting just sharply opposing moves in stocks, and it's not just in the Mag 7, it's happening across the market, frankly. And so we're just seeing it on pretty good display. We'll circle back here in just a minute and take a look at more of those stocks. But if we take a look at just like the index performance this week, and we look on the right hand side, again, you can see that the market is mixed to positive to finish out this week. And so again, lots of dispersion underneath the hood where there's big up moves, big down moves. From an index perspective, they kind of cancel each other out. And if we take a look at, kind of the most important chart that we've been staring at, it's the S&P 500 range-bound summertime chop, and it continues here. And in fact, it continues perfectly in the middle of this range. So we still have 7,200 on the support downside. We have 7,600 on the upside. And the message over the last few weeks is don't overtrade. Don't get chopped up. Don't get too excited at the highs. Don't get too depressed at the lows. Until we break the structure, we are in this mean reversion, choppy, dangerous overtrading environment. Nothing has changed. In fact, it's just extended its sort of range in a sort of tighter way. So S&P 500 square in the middle. NASDAQ 100, we got some more things to talk about. So this is what was breaking down in week last week. You can see that we did push lower here into the Fed, into a big earnings day, and into the other big story of the week, which is situational awareness, the hedge fund that I think is on everyone's radar. Certainly at this point, this is kind of prodigy Leopold young gunslinger Aschenbrenner, whose fund basically was kind of caught in a chess match against the old senior Citadel, which, one might say forced liquidations or kind of got the upper hand and basically saw some blood in the water. There was some stress and pain going on in this hedge fund that obviously has still done spectacular this year, but was certainly in a kind of high stakes leveraged positions in lots of the AI infrastructure names that we all know and trade. Here we go with the market maybe, between that event happening where there was a very clear actor who was getting a little over their skis, you had the Fed and you had Microsoft earnings, all kind of just apex kind of created this nice little V shape that we're enjoying here going into the weekend. We did get a nice bounce. I don't know that we're out of the woods yet, though. I mean, this frankly just reset oversold conditions, but there is still damage out there, particularly in lots of the AI infrastructure names. So you could throw semis just in that bucket, generally speaking. In fact, if we look at semiconductors, this looks kind of similar here. We got a nice bounce. This bounce could be the low, right? It could be the cycle low here that we just put in, and we're going to chop it around and maybe retest it once. But for now, we still have, right, semiconductors, lower lows and lower highs happening. We got a downtrend that we're kind of bumping our head against. If we go back to the Qs, we're at the kind of retest level of this range. We've got a series of lower lows and lower highs going on. So I don't think this is an all clear signal. I think we reset oversold conditions, and the real work starts Monday, August, a new calendar month. And I think we want to take the temperature of the market here over this next week to see if it can hold up and not just sink right back down and want to retest these lows so quickly, to see if the leadership can stay bid and to see where some of this rotation happens. I think it'll be an important week for me and for the way we're looking at things. See if I can pull up our market navigator. You know where we stand, right? So last week, we went down into the weak swing environment. Our outlook for swing traders here was downgraded again. It initially was downgraded towards the first week of July, where we went from bullish to sort of neutral or mixed. And then we downgraded again last week coming into this week. So here we are in what we're thinking is a weak swing trading environment. We just got a 2 or 3 day bounce. We would still be selective here. We are being selective. We think cash is still worth its weight in gold. There are some opportunities. We are taking shots. We've got a couple of long positions on, but I think the mandate right now is to do less, wait for the A+ quality setups, and let's let the dust settle and let this market prove itself, because we've got clear levels to act against. I think the Qs need to get back over 700. I think and then eventually you want to see a breakout. And then you've got the SPY, which we already looked at, a move over 7,600. And your individual stocks, well, I think that's just going to be a good bottoms up approach. I mean, the one benefit of this market is if we look at the equal weight index, the RSP, it is outperforming. I mean, there's a more consistent kind of trend higher here for just the average stock. And so it is a stock picker's market. There is opportunity out there. There are things that are leading and were very resilient throughout the last couple of weeks. I think you just need to kind of get in there, do the work, and look for those momentum names. That's what we're trading in our Rockets portfolio. Maybe we'll look at some setups in just a little bit. So when I think about everything that happened this week, lots of volatility, but not a whole lot changed in my book. From a swing trader perspective, I think it's still, kind of started the week cautious, kind of ending the week cautious. And that's kind of the prescription I have right now. Microsoft, like we talked about, just a massive, massive move. I mean, right back up here to the June highs effectively in this 1 week. Daily chart now, huge gap, getting some follow through. Obviously, that's long in the tooth, but I think that ripples down to just a lot of other names. Amazon, similar look here, just moving back up towards those June highs. And then Apple sinking and, continuing to see selling pressure throughout the day here. Still in an overall uptrend. This is the strongest of the Mag 7. I think Meta now is what everybody is questioning for sure. So I think expectations are coming down for Meta on what the company's doing and how it's kind of just, pivoting kind of left and right. At least that's what it seems like. I'm sure on the inside, things look a lot different. So what else? We got the VIX, which has collapsed throughout the week. We're still at 17 though, so it's not super cheap. We're still in the middle of earnings season, so we're going to have more companies reporting next week, and we're very much getting into the thick of kind of lower volume trading as we go through August here. So expect volatility, expect dispersion for the individual stock. I would expect still mean reversion and range bound behavior on the index level, thinking SPY. So I would expect this to sort of be pinned in the range, lots of stocks moving, stock pickers market from the bottoms up. If I look at, see if I can pull up my so if we look at our Rockets portfolio here, we did have some whipsaw this week. So we had Dell, we had Hut. We ended up selling both of those for a loss. We did pick up Datadog here on Friday, and we still have Hewlett Packard. So HPE, we are still long this in our momentum Rockets portfolio. This is, again, a name I would consider holding up pretty darn well. It had a huge first half run. It's consolidating, and we like the look of it here for all of the criteria we care about. And Datadog, this is a new purchase for us into the weekend here. So we purchased it on the open Friday. Again, it had a big earnings kind of lift up here in May. It's consolidating. It does have earnings coming up in about a week or so, but these are two momentum leaders that we like, that are showing a good relative strength, and that we're willing to stick our kind of toe in the water and have exposure in this market. We're, despite the fact that our outlook is a weak swing trading outlook, we will respect that, but we will still take some shots when we have high quality signals coming through. So right now, basically going into the weekend, we'll be 80% cash, give or take, or 82% cash, and then roughly 20% invested in these two signals. So that's kind of the way we're navigating things. Momentum got flushed over the past month or so. So I'm very excited about the potential rebound here in our Rockets portfolio. The portfolio, like you see here, with specific position weights, specific targets, portfolio risk controls, this is a new sort of trading system from us. This is an upgrade from the general momentum kind of best ideas quant rockets list that we've been operating with for this past year. This now takes it into, hey, here's how many slots you have to allocate to. Here's how you manage a portfolio. Here's how you're contextually aware of the market environment. So this is something I'm really excited about, and I'm excited to see how it navigates the rest of this year. So if you want to learn more about that, we have a link in the description of this episode. And before I forget, how could I forget our sponsor over at Investors Business Daily? Check them out. We've got links in the description of the show, Market Surge, and their IBD digital platform. All right, something you want to do some research and play for the next momentum spike. Check out Market Surge here and do some screening and get your homework and your watch lists into check. So that is it for me. Enjoy the weekend. Thank you so much for the attention here every single week. We'll be back on our regularly scheduled time next Friday. Take care.